Hey everyone, welcome back to Upside Down Data. Today I want to talk about Hedera Hashgraph, its native token HBAR, and what we can make of its price action during this crypto rally that we still, at least so far, seem to be in the middle of. So I want to start by talking about our risk model here at the channel, the Upside Downside Potential Indicator, or UDPI. Showing you here the long-term version that cares about moves that play out over months, so it's a little bit longer, more macro in its focus. Here I'm just showing you HBAR's historical price action color-coded based on the risk model. So red, high risk, green, low risk. And you can see it does a good job capturing these trends over time. The distribution, acquisition, and who knows, right now might be another acquisition point. And we can see this if we just look over at the raw values across time. Yellow here is again HBAR's price. White is the UDPI level across time. So UDPI on the y-axis here. And you can see again, spiking up during these tops that HBAR has had and then coming way down during these kind of bottoming points. Now, we still don't know if this is going to be the bottom for HBAR, but it's at least a local bottom. And you can see that being reflected on the risk as well. Risk was actually the lowest that it's ever been for HBAR on this move down to what has so far been the low back just a couple months ago before we went back into this rally, and HBAR has been joining in. I think HBAR is actually 100% up off of the absolute lows. There's a wick that went down all the way down to the 4 cents range. We're currently actually up over 100% from the lows of that local bottom. Will it hold? Who knows? But certainly the UDPI thinks that was a very low risk point for HBAR, and now we're starting to move back up to the upside, which is expected. It's expected that this would print the lowest risk score because this is in fact the worst drawdown that HBAR has ever seen, or at least kind of the worst kind of real drawdown. If you look at some charts of HBAR, they include the kind of initial launch price, which is kind of unrealistically high. I don't really count that. I think this is, in my opinion, the worst drawdown that HBAR has ever seen, especially that's seen since it's been a more mature asset. And so the fact that this got down to such a low risk level shouldn't really be that surprising. But now we're starting to chart a course back to the upside, both in price but also in risk. We're now getting up closer to -3, really coming off the deep lows down here. And what that means is that we've realized some upside, but the model still thinks there's plenty of upside that's left should HBAR continue to want to run. Now, I personally don't think that HBAR is just going to go ripping off to set new all-time highs. I don't think any crypto asset is going to do that in this rally. But certainly we could see some decent upside from here before maybe having to see a pullback. And if we look at our short-term version of the UDPI, so that's what I'm showing you here, this cares about moves that play out over days to weeks, so a lot more short-term in its focus. You can see that the level is actually up above -2, so not actually that different from the long term, which is a good news, because really with this indicator, this will spike up a lot more quickly in these kind of shorter, rallies to kind of tell you when these more short-term rallies are starting to get exhausted. We haven't really seen this get too overextended yet. Now, this is still a very bearish time in the crypto markets, so I would personally be surprised to see, the UDPI get back up to, these really high levels like it's been at its topping points. So certainly I would be looking at a level maybe up in kind of the 0 to 1 range, which is often acted as kind of this resistance zone, generally speaking, for HBAR. If we get back up to there, like for example we did back here in March, earlier this year, I would expect that maybe to possibly act as resistance, us not be able to push up much further. And that would likely coincide with us getting back up to test some of these more technical resistance zones that are up here. But who knows, if we slice through that, there's plenty of room that could move up. I'm just going to be watching kind of the 0 to 1 range on the short-term UDPI for HBAR, being a possible logical place for it to kind of run out of steam. But of course, if the rest of the crypto market goes crazy, I don't think HBAR is going to be left in the dust either. But that's just kind of my base case right now. We'll have to wait and see. So should we be thinking that HBAR is rallying right now, or should we be believing this uptrend? Well, we have some other indicators here at the channel that can give us some idea. One indicator I like to look at is our market direction classifier, or MDC. Now, familiar with this, it looks at the asset's price action and it creates a critical level. If it thinks that the asset is above it, then it's bullish. If the asset falls below it, then it's bearish. And generally speaking, you can see it does a pretty good job of identifying these kind of bigger upswings, downswings, big parabolic moves, bear markets, moves up, bear markets, etc. A few little blips, a couple kind of fake outs, but again, the MDC level stays relatively constant in those points. So if one were trading based on the MDC, one really wouldn't really lose much because one would just buy in here and then just sell out here. So of course, not financial advice saying you should be using this indicator for trading decisions, but if one were to use it, that's one of the things that's nice, is it helps to manage risk by giving you this kind of easy to follow, critical level to watch. Prices above, bullish, prices below, bearish. And you see that we flipped above that, kind of early on in the beginning of this rally here. Now we've been above really ever since. We kind of flirted with the MDC level once here, but for the most part, it's been kind of above. So from the MDC's perspective, a bullish outlook on HBAR is very reasonable here. In fact, it thinks it's more reasonable to be bullish on HBAR than bearish. And if you're curious, the current critical level of the MDC is just below 7 cents. So as long as we stay above that level, basically, that will be bullish. Now, this is a dynamic level. It is changing. You see it's actually been coming up a little bit more recently. So it'll be interesting to watch how this adjusts. But, as of right now, it's 7 cents. And, it will be changing over time. But we're certainly not, right at the level right now. We're comfortably above right now. But if we were to sort of plummet below this, that would be concerning. So that's also good news. That suggests, HBAR is in an uptrend, and it's very reasonable to believe that it's in an uptrend, at least from this model's perspective. Now, if we want to zoom back a little bit, look at a bit more of a macro picture, I like to look at the momentum bias indicator, the MBI, which kind of tells us more about momentum in the market. So if you're not familiar with the MBI, basically 0 is kind of the average amount of momentum that's in the market. And it's momentum bias because, moving up above means that the market is kind of biased in the positive direction. It's kind of this bullish bias that, generally speaking, moves to the downside, will quickly get bought up and pushed back up. Whereas if you're down in the red, if you're below 0, that's a negative momentum bias. That means that there's a weakness and that negative momentum is likely to be prevailing. And behavior on the MBI tends to be relatively consistent across assets, and you can kind of read the tea leaves to some degree to get an idea of what might be going on. So when you see kind of this oscillation around 0, oftentimes that ends up happening in these kind of accumulation zones before big moves. We see this with Bitcoin, we see this with Ethereum. It's a common pattern. This oscillation around 0 tends to happen in kind of transition periods or oftentimes before big bullish moves. In bear markets, you tend to see exactly what we're seeing back here if we look at HBAR's history, where we see a lot of time spent in the red, occasional attempts to reestablish positive momentum bias, like here back in March, and then those quickly get reversed, to get rejected, and you just go right back down to the red. And so you can see that we're now poking our head up above 0 again, kind of like we did here. But now if we want to get a more long-term bullish outlook on HBAR, what we don't want to see is this just a roll over again and come right down to the red, because that would just mean, we're just getting a continuation of the bear market at that point. And very likely what will happen is either at best sideways action, but more likely, I would think, actually downside moves to the downside. What I'd like to see is kind of behavior like we saw back here, where we can get above 0, start spending some time up here, maybe dip down to the red occasionally, but kind of more or less start oscillating around 0, where we kind of come up, down an equal amount, kind of come up. That would be a sign that we might be getting back into one of these transitionary periods before potentially another leg up in the market. So a rejection down, not good. Be able to spend some time up here, and then maybe have to dip down and then start oscillating around. That's what I'm looking for, to have a more kind of a signature of a more bullish outlook. So in the short term, something like the MDC will be giving early warnings about trend reversals that can be watched. But then getting an idea of where we are in the market cycle, I like to look at something like the MBI and give us a good sign of what's going on with momentum, and are we maybe building up for another big move. So if we think about all of these models kind of together to summarize across them, clearly HBAR was at the lowest risk period it ever had seen back here, and that's not surprising because it had been such a nasty downtrend. We're starting to chart a course to the upside, and what that means is because we had gotten to such a low risk level, the model thinks that there's plenty of room, there's plenty of clear skies to the upside should market conditions allow HBAR to rally. And so far, the MDC thinks that it's more reasonable to be bullish than bearish. So until that changes, I think from a data-driven perspective, it's very reasonable to say, all right, a bullish outlook on HBAR is reasonable right now. And then with the MBI, we're right at a critical juncture. Are we going to really start establishing a positive momentum regime, which could then set us up for a next bigger move later? Or are we going to just get rejected back to the downside? So that's what I'm seeing. I think what my overall outlook then would be optimistic, but also still cautious. You know, it is still very much a bearish market right now. Macro still unknown if really the bottom's in on any of that. And so what I'm looking at is I'm just going to be watching the data. And right now the data say it's reasonable to be bullish. So overall I'm bullish. But then if that changes, you know, if we lose the MDC critical level, for example, or if we roll over here on the MVI, I'll then become more bearish. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. Put a lot of updates, better indicators, and more over there.